Going back to that animation, what Caitlin just told us, the reason that some of the estimates, and it's very early, the estimates have been so high is the storm surge and the fact that there is so much valuable real estate now on this area and even inland.
Absolutely. 758,000, more than that, homes are going to be in the way of this storm surge. Flooding is going to be a huge problem. This is going to have a huge economic impact, because if you think about your standard home ownership policy, it doesn't cover flooding. That's going to hurt a lot of consumers. Even now, since last year, we had those 3 major storms, Harvey, Irma, and Maria. The insurance companies have got a lot smarter and tighter with their pricing. So now you have a deductible, a hurricane deductible of 1% to 5%. So say you have a house that's insured at $600,000, and you have a 2% hurricane deductible, you have to pay $12,000 out of your pocket. Which
many people just simply do not have.
Right.
And that is unfortunately, I think, going to be the economic remnant of the storm, which is how the insurance market has evolved and how the insurance market necessarily has not benefited many consumers. I mean, we're already seeing reports of how many people are underinsured or uninsured against this kind of damage.
Exactly, and that's why, you know, there's estimates out there. CoreLogic is saying that the impact is going to be over $170 billion. That's more than Katrina in 2005, which was the most costly of all hurricanes that we've endured so far. And the reason is, again, it's because of this flooding. Now, the insurers that have the most exposure to this area is State Farm, USA, and Nationwide Mutual. They have about 40% of the market. So those will be some of the companies to watch here.
You know, we just, that video of the storm surge was simply eye-opening, and we talked about it here. There's nothing more dangerous than water. I mean, that's kind of what we have to gather. And the priciness of the real estate, all the way from where Contessa Brewer is in Myrtle Beach through Charleston, obviously Kiel Island, these are some of the most expensive, where a lot of our viewers may live or have secondary residences, multi-million-dollar homes. And then, of course, you go inland and you think about this. I wonder how long, do we have any idea, Lindsey, how long it will be before we really know the economic extent of this?
I think it's going to take a while. If you look back last August, September, Harvey and Irma, they hit Texas and Louisiana. And the impact there, the Commerce Department didn't come up with an actual estimate for the third quarter to really say how that impacted GDP. But there's been estimates out there that it could be anywhere from, you know, a 1/4 percentage point to GDP to about, you know, 3/4 of a percentage point. But we had great GDP
and the difference, I was in Galveston and Houston during Harvey last year. And the one thing about that region, unlike this region in North Carolina, that Texas region, that Louisiana region, they're not, I don't want to say used to flooding, but the area, it's amazing. The next day, 2 days later, the water was gone.
Right.
It was 9 feet in some areas, literally. 2 days later, 48 hours later, the water was gone. This area is not like that.
Well, and also another difference is in that area in Texas, that has huge exposure to the energy sector, whereas the Carolinas is tourism, it's consumers. So you're going to, like, people are going to miss out on paid jobs. They're not going to go to work. Worker productivity is going to go down.
It's not going to come back, as we talked about with analytics. The restaurant, the hotel, they're not getting that business back. We were there, the refineries. Now, luckily, there's not as much of that economic impact as far as the refineries go. That's what made Harvey so scary from the energy side of the story. But there is a giant nuclear power plant about 4 miles inland, so we